GameStop.
GameStop now up 75%.
We like the stock. We like the stock.
What an absolutely game-changing week. And by game-changing, I mean game-stopping week, because everything that happened in the stock market around GameStop, Robinhood, Wall Street bets is going to change the course of history and the way that we perceive Wall Street and the way that things work on Wall Street forever. For those who aren't quite familiar with the situation, but I'm assuming at least some of you are, we're going to go through the timeline of events that kind of brought us here, and some of the things involved with the Wall Street bets-based squeeze of GameStop, things like Melvin Capital being completely put underwater, and Robinhood shutting down trading, and what that means for the economy and for Wall Street moving forward. But before we start this video, all I ask is that you like and subscribe down below. It really helps me out. I don't make any money off YouTube, so if you don't like and subscribe, I'm probably gonna have to eat this little bunny here. She's gotten kind of fat lately, probably because she shorted GameStop at 300 and the price has gone down a little bit. Oh, and she's mad now too because of all the stuff I'm about to say about Melvin Capital. So yeah, like and subscribe and then we'll jump into it. So I'm assuming people here have had a little bit of an introduction, have heard the headlines over the last week of what has actually happened with GameStop, what a short squeeze is. If you haven't, I have made videos here and here about understanding how the stock market works, and you can get a quick primer on all these little terms I'm going to use there. But let's just dive into it. Let's go over the complete course timeline of events of things that have led up to this momentous occasion. In June 2019, an r/Wall Street Bets user named Deep Value started buying January 2021 calls on GME, and he subsequently turned $50,000 into what's now worth about $47 million as of the making of this video, just on those calls and common stock options. In August of 2019, Michael Burry, who is famous for architecting The Big Short, disclosed he had a 3% position in GameStop stock, highlighting that 50% of their stores were actually cash flow positive, despite rumors about the retailer kind of going out of business. 1 year later, in August 2020, Ryan Cohen, who was the founder of Chewy, the pet supply online e-commerce platform, disclosed that he had taken a 10% stake in GameStop. In September of 2020, even more r/Wall Street Bets users started to make posts about GameStop, noting a couple of factors. One, that it had about 120% short interest position, which doesn't really quite make sense, but that fundamentally nothing was going too wrong with the company to warrant that. There was a new console cycle coming, not all gaming was going digitally right away, and that their loyalty program had about 55 million users. And the convergence of all of these factors could potentially lead to a squeeze in the stock. In November of 2020, Ryan Cohen pens a letter to the GameStop board and recommends that they do a complete strategic overview and rehaul plan of action to evolve their company into a tech/e-commerce company, not just a mall-based retailer. And then someone else in Wall Street Bets noted that a large hedge fund named Melvin Capital was synthetically short GameStop and had been adding puts onto their position for over 4 years at that point. Fast forward to 2021 of this year, GameStop strikes a deal with Ryan Cohen and adds him to the board of directors, and the stocks spike up about $20 per share. And 1 day later, the stock closed at $40 per share, driving the short interest to about 140%. So what you essentially had is institutional investors on one side loading up puts and shorting common stock on GameStop, with retail buying on the other end through platforms like Robinhood and these kind of low commission or no commission brokerages. And institutions added so gigantically onto their positions that they were short shares that didn't actually exist through a mechanism called naked short selling, which is very illegal but somehow still happens, and it's resulted in a 140% short interest in GameStop at the time. On January 19th, infamous short seller Andrew Leff from Citron Research announced that he was also shorting GameStop stock when it was about $40, saying that it would go down to $20 very swiftly. But over the next 2 days, GameStop stock kept running past now its previous all-time high of $67, and Citron was forced to close out their short position at a 100% loss. By January 25th, GameStop stock had risen so quickly and by so much that Melvin Capital, who was stuck in their short position, had to get bailed out by Citadel Securities, don't forget that name, and Point72 Management, run by Steve Cohen, owner of the Mets, to the tune of $2.75 billion. In fact, Melvin Capital and these other hedge funds who were mimicking the same play were in such a tight position that they had to start selling their long positions in stocks like Alibaba, Amazon, Netflix, and Facebook just so that they could post enough collateral to keep their GameStop position. By January 26th, r/Wall Street Bets has started to catch on to this phenomena of short squeezes, and they picked other stocks like AMC, BlackBerry, and Nokia, where hedge funds had taken large short positions, and they squeezed them out of those positions too, causing these stocks to rally hundreds of percent in just a day or two. But by January 28th, the party had sort of stopped because places like Robinhood and Interactive Brokers, platforms which these retail investors were buying these shares on, had all of a sudden blocked access to buying any more of these shares, and companies like GameStop, AMC, BlackBerry, Nokia only allowing their users to sell the stock, which subsequently caused around a 40 to 70% sell-off in each one of these names. So one of the things that's really important to understand about this whole story is that Robinhood, who is the prime brokerage for these younger retail investors who are buying GameStop, doesn't charge commissions, but they still make money a different way called payment for order flow. And essentially the way that that works is that when you go onto the Robinhood platform and you're about to buy a stock and you click the buy or the sell button, by milliseconds, your data before your order is filled is sent to these large hedge funds. They pay for this data so that they can front run you on certain trades. They can buy a stock before you buy it. They can sell a stock before you sell it. They can do the inverse of that so they can front run your trades in any way. And this data is extremely valuable. So valuable, in fact, that going back to what we were talking about earlier, Citadel Securities, who bailed out Melvin Capital out of their GameStop position, makes up 40% of Robinhood's revenue. So what started out as a discussion about the fundamental value of GameStop has kind of morphed into this battle between two ideological forces. The institutional investors and short hedge funds who want to destroy GameStop, bring this company to their knees over years and years, versus the retail investor who wants to bring these hedge funds to their knees by forcing them to cover or to get short squeezed in their large short positions. It's almost become the perfect continuation of the Occupy Wall Street movement, except this time people are putting their money where their mouth is and they're forcing these hedge funds where it hurts the most, in their pocketbooks. So the thing that I think a lot of people are getting wrong about this whole story is it's not about the fundamental value of GameStop. And there's this fear-mongering going on right now that we have to protect these retail investors. We shouldn't let them buy on Robinhood. Robinhood made the right decision blocking them because they're going to get hurt in the end.
I voiced my concern the other day about the effect on unsophisticated investors. Obviously, some of those who think they're sophisticated took offense at that.
It will end very badly for the public.
This is extremely dangerous to the marketplace and dangerous to our economy.
It's not really about making money anymore for these people who are in this trade on r/Wall Street Bets. It's about sending a message. It's about sending a message that hedge funds shouldn't have all the power on Wall Street and that through a collective mass of millions of people, they can put their money where their mouth is and really make change when it comes to the way that hedge funds operate, shorting these companies into the ground that they believe have no fundamental value. These hedge funds, these people who have beaten down these companies through shorting, are alone. They're the only people playing this game, and they're making lots of money doing it. They're taking these large positions, crushing these retailers, preventing them from being able to raise capital to do certain things because of the suppression of their stock price. And now you're seeing all of these retail investors who are liberated by the ability to kind of buy stock whenever, wherever, for no fees, kind of put their money where their mouth is. The thing that's really dirty in all of this is obviously the ties between Robinhood and Citadel Securities, who has an interest in shorting this stock. And the fact that some of these brokers have been able to shut down trading is completely unethical. And I feel like overnight, this company who has run on kind of democratizing the stock market has ruined their reputation. And, I really hope they pay the price and they pay the piper for it. The idea of Robinhood was to take from the rich and give to the poor, and Robinhood, the trading platform, has done the opposite. It's kissed the boots of the sheriff of Nottingham. And it's really troubling because right now there aren't really many alternatives for people. It's very difficult to move your money off of Robinhood and take your votes somewhere else to another platform. I've heard that Fidelity has never really blocked trading of these names, but you have all sorts of other brokers doing it as well. You have Interactive Brokers, you have TD Ameritrade. Robinhood is kind of at the center of it because they've created kind of the easiest app, and they probably have the most millennial customers out of all of these brokerages. And it wasn't like they just outright stopped all trading of all stocks. They focused on these companies that were being shorted pretty heavily, And they didn't just stop trading for these stocks altogether, they just stopped the buying of these stocks. So they prevented retail traders from adding to positions, from managing their positions. They only allowed them to sell, and now they're kind of opening it up a little bit, and they're saying, oh, you can buy 1 share of GameStop and 5 shares of AMC, and it's ridiculous. It's so much bent in the favor of hedge funds being able to manage their position. When Robinhood comes out and says to millions of investors that you can't buy any more stock, you can only sell it, what do you think is going to naturally happen? People are going to panic. They're going to sell. As soon as they made that announcement, the GameStop share price fell from like $370 to $119. And if you're like a quant or a hedge fund, you were completely able to manipulate and take advantage of that. You were able to cover your short positions as the market kind of panicked. You're able to kind of buy low and then make some money on the rise up when, the panic kind of subsided. And you can bet your ass that tons of these companies, they love Robinhood for this. Citadel Securities, Melvin Capital, they probably made out like bandits while this whole thing was happening. These hedge funds who were heavily short kind of got their hall pass to cover a bit of their positions. It's completely broken. It's completely unequal, and it really begs the question of where do we go from here? And the way that I see things going, obviously, is through decentralization. I think Bitcoin is just that. It's decentralization of money. It's taking it out of the hands of governments and corporations or other issuers and basing money all around math, this transparent open ledger. But we need to start bringing the idea of decentralization to more platforms as well. I think this year has been the year of decentralization, and it's only January, right? Or February by the time this video is coming out. But we've seen what's happened already this year. You had the Capitol protests, you had Trump getting banned off of Twitter, YouTube, Facebook, Spotify. It's like, what did he do? Listen to shitty music? I don't know. It's every platform around the world banned Trump and started banning all these conservative voices. And so that was kind of step number one, is corporations, limiting free speech and the ability for people to kind of say what was on their mind or to kind of support certain political beliefs. And, that's still an argument that's ongoing. I don't want to put that under the rug. But the second part of this that has already happened in the exact same month is now brokerages controlling your money and telling you what you're able to buy or not buy, and having certain brokerages limit your ability to do it. Very much suspiciously focused on the smallest of retail investors who are investing, $100, $1,000, maybe $10,000 tops on platforms like Robinhood, telling these people that they can't buy shares while these other companies who have direct accesses to, these clearinghouses and prime brokerages can cover or manipulate their positions and take advantage of that fear. So the killer app of the 2020s, it's going to be decentralization. We've already seen that with the Bitcoin price. But the next thing to come out of this, I hope, and I think is going to happen, is that you're going to get brokerages that are operating in a more transparent way. If you ever watched my other videos, I am a huge fan and admirer of Patrick Byrne. Patrick Byrne was the former founder of Overstock. He's been caught up in a lot of stuff politically, but he was actually fighting this battle against naked short selling and this abusive short manipulation by hedge funds all the way back in around 2005. And he actually won several lawsuits against major banks over this. And so recently he's kind of taken on things like election fraud, but before he left Overstock, he founded this company called T0 through another subsidy called Medici Ventures. And the whole idea of T0 was to kind of democratize the stock market, to take all of these stocks, which are kind of manually processed through clearinghouses on private ledgers, and turn all this stuff transparent and kind of put it on the blockchain the same way that Bitcoin is putting financial transparency on the blockchain as well. This is kind of the way that things have to change, or else there's just going to be riots in the street. And I really hope it doesn't come to that, but you can feel the tension and the anger brewing around this GameStop situation. And all I can say is that the people who are in charge, the oligarchs who are kind of letting this highway robbery happen, the corporate heads who are, contributing to this, you better hope that this lockdown lasts as long as it does. Because people are protesting. They protested with the Capitol riots, but now they're just protesting from their phones. They're buying stock as a protest. It's not about making money. It's not about getting rich quick. And if you think the whole idea is about protecting investors, you're missing the point. The point is that this is a rebellion. This is a fight against the hedge funds and the cronies who were bailed out in 2008. This is an active continuation of the Occupy Wall Street movement where people are voting with their dollars and they're causing damage. They're blowing up these hedge funds who have already marked about $70 billion in losses this year alone. This is a cultural movement. And one one of the things that I really love to see, and I want to share a little bit of here, is all of the different things that people have done to be charitable when it comes to some of the money that they've made with GameStop. Because again, for a lot of people, it's not a get-rich-quick scheme. It's not about the money for them. It's about making a message. And now the people who got in even just like a week or two ago before the, you know, $100, $300 price on GameStop, they're taking some of their winnings, they're not selling their whole positions, and they're doing things with it. They're going out there and they're buying billboards to buy GameStop. They've started this whole culture of, you know, diamond hands, don't sell, you know, for anything. But so many of the posts that I've been seeing are actually about donating as well. People are going to GameStop and actually buying things like games and Nintendo Switches. They're donating them to children's hospitals. I've seen countless stories of people going out and paying for things like hospital bills, you know, clearing student loans off, buying their parents a new car or this or that. These are young people who are, you know, making their money matter and making their voice heard. And to kind of underestimate that is completely missing the point, as I've probably said a billion times by this mark. So when I see all this stuff on Wall Street Bets and other places about how people have made this money and they're letting it kind of change their life, and it's you know, they're able to have a voice, I think about my own story and how I kind of had, you know, $4,000 left after university of like extra money from student loans that wasn't spent. And I was able to go out there and make my own purchase. I purchased Ethereum at the time when it was like, you know, $13 or so. And that has completely changed the outcome of my life. I did that on all available information on the internet. I didn't have a financial advisor tell me, do buy this or don't buy this. You know, I didn't have a platform that said you can't buy this many shares, you can only sell it. I had open access to this stuff. And, you know, I used the information that was given to me to kind of change the outcome of my life. I was able to start a business with this. I was able to employ, you know, dozens of contractors and people from the Philippines to Canada to the US to Europe. And I used that all with money from that initial investment. And now it's helped me so much that I'm able to kind of, you know, have my own property, and I've been able to just kind of stop even my own business and just try and make YouTube videos to help people. But the lesson to be learned out of this is that, you know, millennials are not stupid at all. In fact, this time we were smarter than all of the hedge funds. These are the same people who doubted Tesla as well, and they lost billions of dollars shorting Tesla, saying, you know, it was worth too much for a car company. It's not going to meet expectations. You know, it's ridiculous that they're valued at this. And now Tesla is worth more than every single car company combined. There's other stories of millionaires, you know, teachers turning into millionaires from just like a small investment in Tesla. And these are the stories you're going to keep hearing over and over and over. And the mainstream media and the press are going to keep going on their parting rampage. And it's the same with the politicians trying to dissuade you from making these decisions. They're telling you it's too risky. It's, you know, it's a good way to lose all your money. The same people who are totally fine, you know, allowing lottery tickets and sports betting are telling you that you're too stupid to do what you want with your money. You know, the same people who say that you can't be an investor in a startup because you don't have $1 million. This idea that your intelligence is measured in your wealth is ridiculous. And that whole concept, that whole notion, I feel has been chipped away at this week with the whole GameStop thing. I hope they continue to chip away at it. I hope that, you know, people really realize that this whole game is just a game. This whole Wall Street thing is a game. There's fundamental value, there's entrepreneurs to back, but at the end of the day, there's buyers and there's sellers, and they're gonna do things based off of news, they're gonna research fundamentals, and you should just let the open market be the open market. Let people take risks. Some people are gonna lose, some people are gonna do really well, but you're guaranteed to lose if you just stay in cash, and you're guaranteed to underperform, apparently, if you give any of this money to these hedge fund experts who have been fleecing other companies for years and are now getting the bitter end of their own pill. So yeah, if you like this video, you have to like and subscribe down below, or else I'm gonna eat this rabbit whole. I'm not afraid to do it. She's had a lot of food recently. She's got a big belly, and she probably tastes very good. So if you do like and subscribe, you'll buy her a couple more days, but that's all I can promise. Anyways, thanks for watching. I'll be covering more GameStop very soon. And yeah, hopefully next time you see me, she'll still be around. I'm just kidding. Don't worry about her. She'll be fine.